Welcome everyone. Today we are going to be talking about credit cards. We're going to be talking about some do's and don'ts with credit cards because, as you may know, if you do not manage your credit cards properly, it could literally ruin your credit. So in today's episode of the Credit Concept podcast, we are going to be talking about some do's and don'ts when it comes to credit cards because everyone out there is talking about how to get this credit card and how to get that credit card and how to get high limit credit cards. But guess what? If you don't understand the purpose of these credit cards and you do not manage them properly, you are literally setting yourself up for destruction. So make sure to watch this entire episode of the Credit Concept podcast. We are going to be covering everything about credit cards and what you need to know moving forward so you do not go into self-destruction mode. Let's get started. Thank you for joining me today. Again, guys, my name is Credit Coach Nicole Scott. If you have not by now, make sure that you have subscribed to the channel on YouTube at Credit Coach Nicole Scott. You can also visit all of the links below to connect more, purchase courses, one-on-one coaching, and so much more. So in today's episode, we are going to be talking about credit cards and how to manage them properly. I talk to a number of people on a daily basis who are in severe credit card debt, and it is literally, just heartbreaking to hear. And it can happen. It can happen to anyone. It happens so fast. You can have great credit one month and just tank it the next month. So I'm going to be talking about, some of the things that you need to know moving forward if you are planning to get credit cards that report on your personal credit. This is geared towards the personal credit, okay? And this is very important information because if you are not educated on how to manage your credit, you are forever going to be paying someone to fix your credit. And in this day and age, you can't just fix credit. Debt doesn't just go away, okay? You can't just expect to have a credit repair person clean your credit file, every time you mess up with credit. Banks and these, artificial intelligence systems that they have put in place for security and all of the AI technology that is available in this day and age, it is harder and harder to run from the truth. So instead of always trying to run, do things the right way. Doing things the right way is going to take you a lot further. And I know things happen and life can be tough, and hell, we're even in a darn recession. Interest rates are sky high, but it's not going to stay this way, okay? At some point, you are going to see light at the end of the tunnel. It just takes time. There is nothing fast about credit. The only thing that is fast about credit is how fast you can mess your credit score up by getting a late payment or having your credit utilization go above 15-20%. So these are the type of things that I want to educate you guys on because there's a lot of misinformation out there, and sometimes it can be very overwhelming who to listen to, what to believe, what not to believe. I'm just going to leave it at this. I would not take legal advice from a consumer law expert. Consumer law experts, aka credit repair people who specialize in consumer law, they are not lawyers. They should not be giving legal advice. And you need to speak with a actual licensed attorney that specializes in consumer law. And you would want to find one that is in your area. You can advise with them because there is a lot of gray area in the law, but people interpret it differently, okay? It can be interpreted very differently, and there are many views on things. Opinions are like a-holes. Everyone has one. I have my opinion, you have yours. They might be very different in some ways, and they might be very much alike in others. But that doesn't mean that our opinions are facts, true. It's just the way it is. So you need to take the concept of things. I give you guys the concept at the Credit Concept podcast. You have to implement the concept to the best of your ability and to your situation. There are so many different credit reports out there. Everyone's DNA on their credit reports is completely different. And what worked for one person might not work for the other because there are so many different factors. We can understand the concept, and at this point, that's all that you need to be worried about are the data points. But in today's episode, we're going to specifically talking about credit cards. And the credit cards falls into the credit utilization category, which is the second highest ranking factor when it comes to your credit score. No matter what version of your credit score that you are viewing, whether that be a Vantage version or a FICO version, your credit card utilization, which means the utilization is the amount of available credit compared to what you owe. Okay, so if your available credit overall on your credit profile is $10,000, you have $10,000 of available revolving credit on your credit profile. And revolving credit are credit cards and lines of credit. Any sort of account where you have a credit limit, but of course the accounts will revolve in different ways based on your spending habits. Okay, very different than installment loans. Installment loans, auto loans, personal loans, student loans, it's the same payment every month until that account is paid in full, right? But a revolving line of credit can change based on your spending habits, and that's where people really get themselves into a pickle because they will get a low limit credit card, $300, and they will spend a little bit of money on it, and the credit utilization goes sky high and it drops their credit score almost immediately. It's the fastest way you can, literally go from a 700 to a 600. I've seen people lose 100 points when their credit utilization went up even to 30-something%. Now, I know I'm kind of getting off topic here, but I want to tell you a quick story about my personal experience before I get into everything else. So when I was first starting credit, I would test things a lot with my personal credit just to kind of see what the result was going to be. Now, online, when you go online and you research credit utilization, everywhere is telling you keep your credit utilization below 30%. Well, I allowed my credit utilization, and at that time my credit cards were not high limit, they were relatively low, and I allowed my credit utilization overall to get to 27%, and it literally dropped my credit score 70 points. Okay, 70 points, and my utilization was only 27%. So when you are first starting to build credit, you want to try to keep your overall credit utilization below 15%, but each individual card lower than 10%. Okay, you don't really want to keep a balance on all of your credit cards, especially when you're going after funding or applying for credit. When you are applying for credit, the best rule of thumb would be to optimize your credit profile to get better approval rates. And optimizing means as many credit cards to a zero balance as possible. Wait for those to update before you apply, because the data that you're seeing as of whatever date is, what the credit bureaus are going to see as of, today's date. So if it hasn't updated, wait for it to update, and then once it updates, you can apply. But back to the subject at hand, you want to make sure each individual card does not go over 10% of the available credit limit. So for example, simple math, $1,000 credit card, 10% of that is $100, which isn't a lot of money, right? In this day and age, you could easily go get gas in some vehicles and be close to $100. But that's the thing. You want to spend what you would normally pay in cash, put it on your credit card, and then pay it off almost immediately. You know, if you feel comfortable paying every Friday, do that. But spend whatever you would spend during the week on, you know, gas, groceries, normal spending, whatever you're swiping your debit card for, put it on your credit card, okay? Build credit with your cash, but be responsible enough to say, hey, this cash that I have in my bank account is already spent. At the end of the week, now I'm going to apply this cash to my credit card, but I'm going to make a spreadsheet and list out all of my credit cards so I can stay organized. And I'm going to put my credit card name, account number, or last four of the account number so I can know which card it is, because you might have more than one card with the bank. The statement date, the due date, very different dates. I've talked about this in some of my other videos. The statement date is the last day of your billing cycle, okay? And that date is what the credit bureau, or what the creditor is going to report to the credit bureau. So if your statement date is the 28th of every month, right? That means whatever your account data is, whatever your account balance is as of the 28th of every month, then that's what will get reported to the credit bureau. So to kind of control your own credit, make sure that you put down, hey, my billing statement date is the 28th. So that means every month, 5 business days prior to that date, don't count weekends, don't count holidays, but 5 business days prior to the 28th, I want to make sure that my account balance is 0 or below 10%. Don't feel like you have to leave a balance to just let it report. The banks know that you've been spending and paying, and that's who we care about. The less we have reported, the less debt we have reported, the better, okay? So we want to make sure that 5 business days prior to the statement date, we pay that credit card down. If you can pay it off in full, pay it off in full. Because you only really need like 2 credit cards reporting a small balance to the credit bureaus, just to kind of, you know, suffice everything, right? You don't need to have a small 1 to 6% credit utilization reporting on 10 credit cards. No, that's ridiculous. You don't need that at all. You only need a couple cards that you know, are your spender cards. And I'll tell you what, when you have these secured credit cards, you do not need to use them, okay? Any credit card that has an annual fee, you can literally just put it in a drawer and not use it, okay? Because those cards that are usually secured credit cards, or, you know, crappy little, you know, Capital One credit cards, or, you know, Crap One credit cards, those, you know, sometimes are not the best, right? They're starter cards. They helped us get to the next stepping stone. Great. But here's the thing. You don't ever want to close them, because you're getting history, especially if you have 100% payment history. You don't ever want to just close the accounts because you're not going to use them. We want to use them as decoration. Again, you have to understand the concept, because we need those credit cards to build credit. Even if we don't use the card every month, it will still report okay. If you look at your payment history, even if you don't use it, it'll still report okay. So it's still helping you build credit, okay? You don't have to use it in order for you to get a positive payment reported to the credit bureaus, okay? That's another myth, so take note of that. And again, guys, if you have not by now, make sure that you have subscribed to YouTube, Credit Coach Nicole Scott. Watch the entire Credit Concept podcast. I've got a bunch of different episodes that I have done in the past, so make sure that you have watched all of those, get educated, and see how I can help you literally change your life with credit. Okay, so let's get back to it. Now, you don't ever want to close your credit cards. Okay, I have a ton of credit cards. A lot of them I would never use. I would never use any of the secured credit cards. I would never use my, Credit One, but I'm not going to close them. Okay, no way, because they've got history on them. And even though some of the secured cards I could get my deposit back if I close the account, that's counterproductive, because I want to keep as many credit cards open that have a payment history of 100%, meaning I've made all of my payments on time, right? That's just going to help show creditors that I'm credible. Okay, so if you have credit cards that you're like, oh my God, I hate that card. As soon as I pay it off, I'm going to cancel it. I'm going to close it. I can't stand those son of a bees, right? No. Keep it open, okay, and use them like they used you. Now we're just going to keep the card in a safe drawer, maybe get like a little case and put all your credit cards that you don't use in there, but still put them on your tracking sheet on Excel or in like a Google Docs, so we can, make sure it's on our list. But put it away. Don't use it. Just make sure that you pay the annual fee, okay? And the reason behind this is because we're going to use them to allow us to build credit. Use them like they used us, right? Now we're kind of flipping the script on them, but we do not want to close it because it's still reporting our history. And if we close it, it could reduce your credit score because you're no longer getting those on-time payments. Okay, so that's what we're using them for. The more accounts that we can have that report an on-time payment, that's going to continue to help our credit score and establish us as being a credible consumer. Okay, so don't close them, put them in a drawer, don't use them, make sure that you pay your annual fee. And of course, sometimes when the annual fee hits our card, I just talked to one of my clients about this the other day. He had an annual fee of $49. The credit card was very low limit, I think around $300. So of course that made the credit utilization go up and it dropped his credit score. Okay, so make sure that on your tracking sheet in Excel or Google Docs that you put in there if there is an annual fee, when that annual fee is, how much it is for. Make sure that you've paid the annual fee immediately. As soon as that annual fee hits your account, pay it, because you don't want that utilization reporting to the credit bureaus. Okay, make sure you have all of your credit cards. And I'm going to say this again, take note. If you don't listen to anything else that I say in this video, if everything else goes over your head, which I hope it doesn't, because sometimes you have to listen to things 2, 3, 4, 5 times before you have that aha moment. You're like, oh, I get it. I understand now. I've had them. I was like that with credit. I would have to watch things 3, 4 times, listen to it over and over and over until I finally had that light switch that went off in my brain, like, oh, I get it. It's just a concept. So that's why I'm bringing it to you, the concept, right? So if you don't listen to anything else, listen to this. This is very important. When it comes to credit, you want to make sure you have all of your credit accounts that report to the credit bureaus on auto pay. Okay, credit cards, they need to be set up on auto pay for the minimum amount due. So if all else fails and for some reason you don't pay, you forget, something happens, you've got that auto pay set up to save the day. Okay, and that goes for all the credit accounts that are on your credit report. If you are serious about your credit, you need to set up auto pay. It's part of adulting. Okay, it's very important because it is very hard to manage your credit as is, right? Don't make your life harder by not setting up auto pay because you're nervous. Okay, set up auto pay. Set it up for the minimum amount due. Okay, make sure your auto pay processes and put notes about this in your tracking log. Set up on auto pay. The auto pay is set to go through on this day of the month. Okay, if you want to pay more, you can. Okay, you still have your auto pay in place, but you can still make additional payments every Friday or every so often when you want. You can also make that additional payment before your statement date. Now, this you're going to have to do on your own and be responsible and put notes in your calendar on your phone as reminders, as a monthly reminder. Hey, my statement date is the 28th of every month. So by, we'll say the 22nd, just to give ourselves an extra day in case there's a weekend or a holiday, maybe even an extra 2 days, right? So we know by like the 22nd of the month, put a reminder in there for yourself. Hey, I need to pay my account balance down so my credit utilization doesn't report to the credit bureaus for this card. Put that in as a reminder in your calendar so it pops up and it reminds you. You also have auto pay set up. So worst case scenario, if you forget to make the payment, something happens, you still have that monthly minimum payment set up on auto pay. Because one of the things that I see is a lot of people are getting late payment fees. Now, if you've never had a late payment fee, you can call into the credit card company and ask them to provide you with a courtesy. Same thing goes for banks. If you have an overdraft fee, sometimes you can call in and ask for a courtesy adjustment. But we want to get out of those habits because we want to manage our credit properly. We want to manage our accounts properly because we want them to see, hey, we are credible. We can pay our bills on time. If I have this much of a track record, that means that I'm going to have a great track record with you as well. And that's how you become more appealing to banks, is paying your bills on time and keeping your credit accounts in check, keeping your credit utilization below 15% overall, and preferably below 10% on each card. And I know that might sound unreasonable for some people, but let's talk about that a little bit more. Now, personal credit cards are really meant for emergency purposes only. If you are looking for funding of some sort to, fund projects or different things, then credit cards on the personal side are not recommended because they are for emergency purposes. They are for, building credit. They are for decorating your personal credit so you can get business credit. They are not for heavy expenses. If you are looking for a larger amount of funds to, say, improve your home, do a remodel, something, vacation of some sort, anything out there that requires, $5,000 or more, then you want to consider maybe a personal loan, maybe a home improvement loan. Navy Federal has a home improvement loan. You don't even need to own a home to do a home improvement because people do improvements on, families' homes, on, rental properties. Sometimes they'll make some improvements themselves in the yard or something like that. But, of course, I wouldn't recommend that. But I'm just saying, you don't necessarily have to own a home to get a home improvement loan. But you want to make sure that you're allocating the debt in the proper way, right? Auto loans, obviously, those are going to be installment loans. So you can get personal loans for different things that you might need. Credit cards are more or less for like emergency purposes, to really build your credit and just show that you are credible. Now, and like I said, they're not meant for heavy debt, but they are meant for you to have protection. So if for some reason someone gets a hold of your card, credit cards, they have, great protection. You can literally shut it off. You can lock it when you're not using it. There's so many different benefits, not to mention the rewards programs that a lot of these cards have. A lot of them have 0% interest for, 12, 18 months. So there's a lot of benefits when it comes to using credit cards. A lot of people travel for free. I just had a client that I worked with, and we've been working on her credit, and she said, well, I'm taking a trip, and I applied for the Southwest credit card, and lo and behold, I was approved, and I saved, I think it was like $150 that she saved just by applying and getting approved. But she also will get, a ton of rewards for all the spend that she does when it comes to travel on that card. So she was like, I literally just basically got my ticket for free. And that's great. That's exactly what these credit cards are meant for. They're meant for you to utilize their benefits program, their rewards program, use your protect your cash, okay? And also just be able to build a solid payment history and solid credit profile. They're really to decorate your credit profile. They're great to leverage to get business credit, because if you have a really solid personal credit profile with nice credit cards that look great, perfect payment history, you don't have a balance on a bunch of cards, that's what lenders love to see, okay? If all of your credit cards are maxed out, obviously the lenders are going to look at you like, hey, there's some financial struggles going on here. We don't feel comfortable lending to them, because obviously they're going through a financial hardship right now, right? That's how they would look at you. You might not be, but that's how banks look at people when their credit utilization is out of control, okay? And I know it's very easy to get, the credit utilization out of whack, but that's why we want to really be organized when it comes to our credit cards. Get your tracking sheet out there, and I have a link that I give people. It's like a free credit card tracking log, and I will leave the link below for you guys, because it is a great little guide to just fill in. And this one that I did is on like the Google spreadsheet, but it's great because you can just plug your information in there and get organized, okay? Because you don't need to use all of your credit cards. I know some cards out there will close your account due to inactivity, but those cards are mainly store credit cards. And to be honest, I'm not heartbroken when I see a store card that has been closed, because store credit cards are not my favorite. I'm not a big fan of them at all. They're usually low limits, high interest, and very minimal rewards. So do not apply for store credit cards unless there is some sort of major benefit that you would get from it, and you would be able to pay it back almost immediately. Because if you get a store card, it's not going to be, generally it's not going to be over like $5,000, right? It's usually like under $1,000. And you go in and you buy your kids back to school clothes or something. Next thing you know, that credit card has 100% utilization. You just used all $500 and your credit score tanked. Okay, that's how it happens. They offer you a small little 10% discount to apply. They approve you for a Weasley $500, and your utilization is sky high, and it just tanked your credit score. So you really have to be educated when it comes to how credit cards work, because there's a very fine line that you have to walk. It's very easy to get into credit card debt if you are not, managing things properly, if you're not organized, if you're not disciplined, because I've helped thousands of people out there get credit cards. Okay, get $25,000 credit cards with, credit unions. And guess what? 2 years later, it's maxed out. They have nothing to show for but debt. And they want my help to get them out of it. I cannot help you. You have to do right by these banks, okay? If you're gonna spend, you have to understand you gotta pay all this stuff back. This is not free money. If you don't have $25,000 to spend to pay back your credit card, you don't need to be spending it, okay? This is not free money by any means. These are very, very, detrimental to someone's credit, because, I had this client at over a 700 credit score. Everything was looking great. And then slowly but surely, that credit card utilization literally got maxed out, okay? And I kept seeing it, and, finally it's like, you got to come to a point where, something has to give, okay? It's very easy to max out your credit cards. I just talked to another client today, totally different client, and one of their situations was, hey, all of their cards are maxed out. Okay, they've got about $12,000 in credit card debt, and that's not a lot because I've talked to people recently that have $60,000, $70,000, $80,000 in credit card debt. Okay, so if you have a lower amount of credit card debt and it's becoming overwhelming, you can do a debt consolidation loan. Okay, now what this client is doing is they're using their car as collateral, and they're taking out a loan against their car to include their debt. So basically their interest rate would be 9% to refinance everything and consolidate their debt into one loan. And that was directly through a local credit union. So if you have a credit union, local credit union that you've been doing business with, then try to consolidate your debt directly with a local credit union. Now, your average bank, Bank of America, Chase, the ones that are more popular, obviously those places might not be as forgiving when it comes to credit card debt. They might not want to help. And that's why I'm a huge advocate of building relationships with, these small regional banks, community banks, local credit unions, because they are for their community. They want to help their community. And of course, at the end of the day, they're a business. They have to spend money and give you money in order to make money. Okay. So a lot of people, they don't get the help because they don't try. Okay, you have to, open up a bank account. And, in another episode, I'm going to be talking about bank accounts and, some of the issues that we run up against opening up bank accounts. But that's in a whole nother episode. But that's why it's so important for you guys to subscribe and listen to all of the episodes, because there's a ton of great information in here. And if I would have known all of this information when I was first learning, and I really try to simplify it for you guys and break it down so you understand, because sometimes when people are speaking, they use terms that we don't understand quite yet, right? And that was the issue that I was running up against. I always had decent credit, but a lot of the terminology, there's so many different words and some of them mean the same thing. So I really try to break it down for you guys and allow you to fully understand everything. Okay. And sometimes you have to watch things over. If you don't understand, watch and replay this video. That's why they are here for you guys to watch. And, if you are finding this information to be helpful, I would greatly appreciate if you can leave me a comment and let me know that you have found it helpful. Share it on your Facebook and social media pages. Share it with friends via text message to watch the episode and to subscribe to the channel. And, give me a thumbs up, like the video, engage with the video, because that helps my channel reach a wider audience. Okay. When you engage and let YouTube know that, hey, I'm finding this lady that I just found on YouTube, her content is super helpful. Okay. And that's what I want to do. I want to be that lady on YouTube that is helping you. We don't know each other, but we know each other. Okay. Because I'm helping you immensely. And that's what my goal is. My goal is to help you, to educate you, to make sure that you understand how to be successful long-term when it comes to credit, because there is no quick fix with credit. Okay. Nothing is going to, change drastically in the next, 3 months. Okay. We could easily get a lot of accounts and things cleaned up and things can, change, but you still have to build credit, and that takes time. You still have to maintain your credit utilization, and that sometimes can take time. So if you do have a large amount of credit card debt and you are struggling with, the utilization being extremely high, if your utilization is over 50%, even over 30%, and you're not going to be able to pay that back over the next, 3 to 6 months by, just knocking down the cards. And when you are paying down your debt, this is how I would recommend doing it. A lot of people call it the snowball method, but basically you want to, again, put your credit cards in your tracking log, and you want to pay down the smallest credit limits first. So all of the cards that have the lowest limit, $100, $200, $300, $500, pay those to a zero balance first. Get those to a zero balance first. Okay. Have everything else minimum payment. Okay. Pay down the lowest limit cards in full first. Okay. You do not close that card. Okay. You put it in a drawer because we're just going to be using it as decoration. We're going to be using it to help us build credit. We do not want to close the account. Okay, we're still getting history from it. It's still going to help you, but you just need to have the education, and you need to have also the discipline. We have to be disciplined, okay? And it's hard because sometimes you're like, man, I got that $300 in there. I just want to, get a pair of shoes, or I want to get this. I need that. No, you don't. Okay. If you can't pay for it in cash, you don't need it right now. Okay. Or you can't afford it right now. A lot of people who spend more than they make. That's an issue. Okay. You've got to cut costs somehow, some way. We have to be realistic with our finances. Okay. You don't need to live above your means. Okay. I know we all want to keep up with everybody else, but stay in your lane. Okay. And your lane can easily change very quickly. You might be in the slow lane right now, but guess what? In a couple months, you're in the fast lane. All right. Everyone goes at their own speed. Don't feel like you have to be a speed racer. That's how people crash and burn. Take your time, do it right, plan, execute, write things down, keep a tracking log, okay? Get organized. I know it's not fun. It's never fun, but it's something that's necessary, okay? So we're paying down our lowest limit cards first, getting all of those to a zero balance, and then we can tackle the big boys, later on. But at least we can get more of our credit cards to a zero balance, because that's really what the goal is. The goal is to get as many credit cards to a zero balance and really only have a couple cards that report a balance. And again, we want each individual card to have less than a 10% balance, and we want our overall credit utilization to be under 15%. Now, another way that you can help reduce your credit utilization is by calling the creditor, the bank, and asking for a credit line increase. Oftentimes, it's just a soft pull, but sometimes if it is a hard pull, it's almost worth it if they do approve you. Make sure that your income is updated. Oftentimes, you can use your household income. So you want to make sure that your income reflects accordingly, because of course nobody wants to give someone a credit line increase when they don't have any income, or their income is super low and it makes them question how they would even pay this debt back. Okay. So you want to make sure that if there is an app, you can request a credit line increase through the app. What I've noticed is a lot of times when we're speaking to a representative, it'll be a hard pull. So if the bank that you're with offers that option through the app, go through the app and do it. Go through their website and do it. And if you are denied, then at that point, you can call into the reconsideration line and you can speak with the department and you can ask them, hey, why was I declined? I would like you to reconsider my credit line increase because I've been a valued client with you. I've been having to make some home improvements lately, so my spending has been higher than normal, but I am paying everything down and I would like for a credit line increase. If they're asked why, you can say, well, I'm going to be making some purchases. I have some home improvements that I'm going to be making on my home, and I need to be able to buy the supplies to complete them. Okay. Or I'm going to be making some purchases for my home, furniture. I'm going to be doing something like that. You don't want to say, well, I'm going to be going to the mall so I can get the new Jordans and I want a Louis Vuitton purse. So yeah, just go ahead and give me a credit line increase. No. Home improvements. You're going to be making some improvements on your home. You're going to be buying some new furniture. You're buying a new bed, whatever the case may be. Okay. Do things that are necessary. That's what the banks want to hear. So you can ask for the credit line increase. You can also add trade lines. Now, trade lines are not going to fix the problem. okay? They might make your credit score go up, so then you would be able to qualify for a better debt consolidation loan. But, you know, the banks are still very leery of people that have all of their credit cards maxed out. Now, if you have a family member or a friend that has a credit card that has 100% payment history and a low credit card utilization, ask them to add you as an authorized user to their credit card. So that way, by you adding an authorized user trade line to your credit report, it can offset your debt. So your overall debt would be much lower, which would make your credit score go up, because the more available revolving credit that you add to your credit profile, the better, right? Because even if you say you have, 10 little credit cards and they're all, 1,000, 2,500, 3,500, but they're all maxed out. Well, guess what? I know it sucks, but you are spending more than you're making. So we have to make some adjustments. You either need to spend less or you need to make more. And I know it sounds so easy, but it's not. It's not. We got to make a plan. You might need to get a second job for now to pay off the credit card. You need to stop spending, okay? If that means meal planning, if that means shopping secondhand, if that means buying your kids clothes from the thrift stores, we need to do that, okay? There's nothing wrong with that. And in fact, it's much smarter to do things that way, because you don't want to have to pay full price for things that you can get at a discount, okay? Now, when it comes to clothes, the thrift stores have great clothes. They have brand new clothes. They have a ton of great things, not to mention all of these different sites that you can go on and buy things like Facebook Marketplace and OfferUp, and a lot of these apps where you can buy things secondhand. I am a huge fan of Facebook Marketplace because there's real people on there. A lot of times you could just pick it up from someone's porch. It's an easy transaction and you get things at a better discount. Yard sales, flea markets, great ways to just be able to get great things secondhand for a much lower cost, and some people just spend too much money. And at this point, once your credit cards are maxed out, you don't want to file for bankruptcy. You really don't, because that could potentially be on your credit for the next 7 to 11 years. Okay. You want to be able to just manage things properly starting out right now. Okay. And that if that means getting a debt consolidation loan, we need to work towards that. And sometimes, you have to try to get your credit score up enough to qualify for a loan. So it's challenging, but I just went over some ways that you can increase your credit score. Of course, the more available credit that you add to your credit profile, the better. Now, if you need to purchase a trade line, we do sell trade lines, but I almost hate selling trade lines to people that are in so much debt already, because I want them to spend the money that they would pay me to pay down their debt. So if you are able to find a friend or a family member to add you as an authorized user, please do that. Okay. I don't want you spending, $500, $600 on a trade line when I would prefer that to go to your debt. But in some cases, it's necessary because we need to raise the credit score up enough to qualify for the debt consolidation loan. We want to try to have a credit score of at least 680 to 700 before we apply. And, sometimes that costs money, right? But it's an investment and it's almost worth it, because once we can get that credit card debt into an installment loan, your credit score is going to go up, especially over time. You just have to make sure that you pay everything on time until all of that happens, okay? But once we reconsolidate it, the credit card debt would then go into an installment loan. So we're just kind of transferring the debt from one debt to another, but we're going to have one monthly payment that we pay to this loan. The interest rate will probably be less, especially if you go to a local credit union that you have a relationship with. So if you don't, now is the time. Find a local community bank, find a credit union. I have other videos on my channel, Navy Federal, and I also have 10 other banks that you can, bank with that offer similar credit products as Navy Federal. And you can ask them directly for some sort of personal loan. There's home improvement loans. They have oftentimes they have debt consolidation loans. They have personal loans. You just don't want a personal line of credit, because the personal line of credit is the same concept as the credit card. It's revolving. So you have a line of credit, you can draw against it, but of course it affects your utilization. The only credit card that doesn't necessarily affect your credit utilization is if you have a charge card that does not have a preset spending limit. Oftentimes these are with American Express. If you have an American Express charge card, there's no preset spending limit, and therefore there is no credit limit. So even if you have high spend on it, it doesn't necessarily affect your credit limit or credit utilization, because there is no credit limit reported. It's just blank, which is perfect. That's fine. But the pay over time option for these charge cards, if you do have one, is very high interest rates. So it's not the best, but it won't affect your credit utilization unless you get bucketed with them, which is where they give you a credit limit. And then if your usage is high, then of course that'll affect your credit utilization, and they could change that at any time. If they see signs of distress on your credit profile, or if they just do a manual review and see all of your cards are maxed out on the personal side, they might give you a credit limit. So that's why it's important for you to manage everything properly, so you don't start getting your limit slashed, you don't start getting bucketed, and all of the things that come along with it. So I hope that this video has been helpful for you guys. I try to give you as much information, and I know I can never give you all of the information because sometimes it just doesn't come to mind, or people have specific questions related to their situation. So if you do have a question, comment, make sure to leave it in the description below. Please do not schedule a call with me unless you are ready to sign up for service. If you are interested in signing up for one-on-one coaching so we can work together and I can help you and walk you through it, we can do that. There is a link below to book a coaching session with me. So if you are looking for information, do not book a free call with us. You will need to book a coaching call with me. I do have mini coaching calls that are 15 minutes. So if you just have a few questions, you can book a mini coaching call. My standard coaching sessions are an hour and a half live on Zoom. We will work on whatever your goals are. I do coaching on personal credit, business credit, and business operations. So if you are needing help with either personal credit, business credit, or business services, you can book a coaching call with me. I also have my personal credit course and my business credit course. We also have the Turo rental car course. So you can check out the links below and visit that. If you are interested in purchasing Tradelines, you can see the description below where you can find our list of trade lines that can help add more available credit to your credit profile, which again, it enhances your credit score and profile, but it does not fix the problem. So that's why it's so important for us to be able to be educated and understand that, personal credit cards, they're great, but they are the fastest way that you can crash and burn if you don't have a plan set in place and if you don't manage them properly. And of course, we might lose 70, 80, 90 points when our credit utilization goes up, but guess what? We're not going to get those same points that we lost. We're not going to get them back when we correct it. We're not going to get 80 points back once we pay our utilization down and then that updates. It's going to take some time to recover from that. I mean, you can add a trade line that helps add history and credit limits and helps enhance things, but we don't want to take the hit, okay? We're trying to avoid taking large hits like that. And one of the fastest ways, like discussed before, that you can take that hit is if you get a late payment or you run up your credit utilization, over that 25%, especially when you first started building credit. Once you're established and you've got, 2 years of payment history, if your utilization goes up a little, it's fine. Or if your utilization goes up a little and you have a high limit credit card, that's fine. Okay. I'm not saying you can't use your credit cards, but you have to use them in the perspective of, hey, what's your credit limit? And, even if you're using and paying to raise your limits over time, you got to make sure that you pay the credit card below 10%, or at least below 15% at the minimum, before that statement date. So 5 business days before the statement date, you got to make sure it's updated. Okay. And sometimes people are like, oh man, I hit a weekend or I hit a holiday and it didn't update by the time it was supposed to. So that's why it's so important for you to plan accordingly. Put these reminders in your phone, do the tracking log, be organized, take action, guys. And, the best way that you can fully optimize for credit cards is, I say the goal would be to have anywhere between 6 and 10 personal credit cards. And I know a lot of people might think that's high. And I have more than that. I think I have like 20. Okay. The more credit cards that you have that you're managing properly, the better. Okay. And if you have 15 to 20 credit cards, great. We don't have to use all of them. Now, like I said before, a lot of cards that don't have an annual fee, like store credit cards and care credit, those are still credit cards, and furniture store credit cards. Those are still credit cards, but they will close your account if you're not using them. So like the Home Depot, Lowe's card, Macy's, Nordstrom's, Old Navy, and a lot of these store credit cards, if you don't use them, a couple times a year, they might close them due to inactivity. But we don't ever want to just close credit cards. Even if it's a store card, we're not using it. Put a little spend on it, $5-10, buy a pair of sunglasses or jeans or whatever, and pay it off. And that way you just keep the activity on it. And same thing, with all of the credit cards that you have open, just put a little spend on them a couple times a year. If the card has an annual fee, or it's secured, you do not need to use it. You do not need to use it at all. You do not even need to use it a couple times a year. It will become dormant, but it's still open. It's still providing on-time payment history. And once a year, when you pay that annual fee, that's good enough. Secure cards and cards that have an annual fee, they don't close your accounts unless, you request it, you don't pay the annual fee, so on and so forth. But that's just a little bit of insight I wanted to provide you guys with today. Again, make sure that you have subscribed to the channel. Visit the links below to learn more. Share, like, provide me with support, guys. That's all that I ask you. So please hit that thumbs up button. Leave me a comment. Let me know if you have found some value in today's episode of the Credit Concept Podcast. And again, but before we go, here is one last tip for you guys in regards to credit cards. There's one thing that I did not mention in this video, and that was balance transferring. Now, if you were to apply for a new credit card, or say if you have a credit card that has 0% balance transfer fees, you can always transfer your credit card balance to that card to avoid getting penalized and for it affecting your credit utilization. So that's always an option too, balance transferring. And a lot of these credit card companies have promotional offers when you balance transfer. So that's an option as well. But of course, it doesn't solve the overall problem. If you can't afford it, don't buy it unless it's an emergency, like, hey, I needed tires on my car, or, I needed this or I needed that. You have to decipher needs versus wants. If I want a slice of pizza, that's a want. If I need to eat or else I'm, not going to eat today, of course, that's a need, right? I want new clothes. I need new clothes, okay? Difference, all right? So make sure that you guys understand it. And if you are planning to balance transfer, you definitely want to just contact the bank to get the exact, process of how everything works, what the, fees are going to be, if any, if there are any promotional discounts or offers or anything that you can apply for. And until everything is completed, you still need to make sure that you make the minimum payment. And that's why auto pay is literally part of adulting. Okay, I know it sucks, nobody wants to do it, but we must. Okay, so that's just a little info about balance transferring. You can also ask credit card companies to modify statement dates, modify due dates to fit your pay schedule. So some people might get paid once a month, some people might get paid bi-weekly, weekly, whatever the case is. You can always communicate with the bank and ask them if they are able to make adjustments, okay? The worst thing that you can do is just ignore the situation and expect for it to just go away. It's not, okay? So we need to deal with it head on. Another thing that you can do is if you are coming into a hard time and you are not going to be able to pay the payment, you can contact the bank and let them know that you are going through a financial hardship and see if there is anything that they can help you with, like deferring payments. Some companies are able to defer a payment so it does not affect you in a negative manner. This is very common for auto loans. If you are dealing with a high auto loan, you can't make the payment, you can ask the bank, hey, I'm dealing with a financial hardship, I'm back on track now, but I took a big hit, and is there any way that you can help me with my upcoming payment and defer it, or defer the next 2 payments to the end of my loan? Now, credit card companies are probably less likely going to want to defer payments, but that's a great option for auto loans. For credit card companies, you can just see if they're able to modify the due date, extend it, give you some sort of extension or modification on your account. So A, you don't get a late payment, B, you don't get a late fee, and you're letting them know what's going on, because the worst thing that you could ever do is allow a late payment to get reported. You literally have a 30-day window before late payments are reported. So if you do not pay your balance within 30 days after the due date, at that time, that's when you would get a 30-day late payment reported to your credit. We want to avoid those at all costs, my friends. So those were just a few tips that we didn't really get to cover, but I'm not a huge fan of just balance transferring, because it's not really solving the issue. You're just trying to sweep it under the rug, and you can only balance transfer so many times before you hit a brick wall. So you really have to be strategic about it. Yes, it is there for those that could use it properly, but eventually you are going to come up against that brick wall where, hey, I can't go any further until I just pay this debt down. So that's why I'm a huge fan of consolidating the debt into an installment loan and going about it that way. But you have to do what's best for you, what makes sense for you. And of course, not everyone is going to get approved for a debt consolidation loan. So I wish you guys the best, and I hope that everything works out well for you guys. Until next time, make sure that you've watched all of the episodes in the Credit Concept podcast. Take care.